Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, friends. Welcome back to another stream with your friendly neighborhood cat dad. I am back. We were just doing a central bank meeting yesterday, and we're back again. We just had news. I'm apologizing now for being a couple minutes late. I got held up on, I was having a conversation with somebody who needed some help with some things, and that tends to, sometimes take over your time for a second. We just had the refinancing rate come out from Europe. ECB comes out with, as expected, the 25 basis points. And really, guys, we said this yesterday, and we're saying it again. Interest rate decisions are most of the time very much as expected. It's more so the press conferences that follow where things get a little bit more interesting. So good morning, good afternoon, everybody. Thank you for being here. I love having this little life hack, Chandler. I've got these headphones now for the live streams. I can hear the music while I'm going. It's hype. Good morning, everybody. Thank you for being back here so soon. Like I said, we just did a Fed meeting last night or yesterday. It was a crazy stream. We had a lot of fun. Ivan, Chris Pulver, Frank, we had the whole building was lighting up with people. So we're back. We're taking a look at some charts. Let's see what's going on. Jason says, curious to hear your opinion on platinum. It continues to sink as other metals are screaming higher. Yeah, the metals market's very interesting. We will definitely be taking a look at that. Probably one of my most interested markets right now is, of course, gold. XPT USD. This is the platinum market. Platinum daily chart here. In the grand scheme of things, platinum has had a really good run here, shooting up by 26% here, up to 1143, back down to 1052. And I think, Jason, I don't know too much about the platinum market, to be completely honest with you. When it comes to rare metals, I generally tend to stick to gold and silver. There is some positive correlation. However, when you talk about something like, for example, copper, right? Copper, similar case scenario. Here's why copper might not be doing as hot. And I think it may be also relevant to platinum as well. So when you talk copper, the quick version is copper's used in growing economies for building buildings, for all sorts of things, right? Well, if economies around the world are slowing, the use case for copper declines, and that's why copper can decline. Gold is different. Gold and silver are usually viewed as safe havens. As we're seeing with small bank crises going on and continuing, we had another bank failure last night, right after Jerome Powell came out and said, we think the banking sector is resilient. It was like something out of a movie. So gold shot up and retested just shy of all-time highs. Here's your 1 hour chart, guys. Man, oh man. Can I tell you honestly, guys, that I am feeling some FOMO right now. I missed the trade. It was so close to my entry, but I didn't catch it. And it ran without me. The trade that I was looking for ran off without me. I tweeted this yesterday. It happens sometimes, but all we can do is we can look forward. Like I said, I am bullish on the metals market, the gold market, the silver market. But right now, this move, I missed it, and I'm feeling annoyed by it. It happens to everyone, but man, it was so close. My idea, if you guys were watching the video yesterday, was 2005 was my entry idea, and we missed it just by a few dollars per ounce there. So let's talk a little bit about the latest. We just had the ECB announce their 25 basis point rate hike. Their refinancing rate coming up to where we currently sit at 3.75%. And, where does that leave us? Well, we have a couple other things we need to pay attention to. We also have unemployment claims here in the United States, which come out again this Thursday today. We'll watch for that. The labor market, after everything, after all the carnage yesterday, the dollar came tumbling down. Now shooting up here as we speak on the hourly chart. The dollar came tumbling down after after everything that was said and done with the Federal Reserve. The fear around a recession is still relatively high, but one thing that was really scary for the markets is that the S&P 500, right, which is, as we very often on this channel talk about as our sort of risk on, risk off gauge, it plummeted yesterday. And it not only did it plummet, guys, it plummeted and stayed low, as basically what Jerome Powell's body language and speech entailed, at least how much of the market said so, is we were expecting language that was, hey, we rate hiked today, but we're going to pause from here. Well, we kind of got the opposite. We kind of got inflation's really sticky. We're pausing here today, kind of shrugging off the banking concerns, and rate hikes may be appropriate going forward. We didn't rule out more rate hikes, and the market hated that. The market said that is not good. The market said no bueno and sold off. And I'd be lying if I said I wasn't feeling a little bit like I got away. I said it yesterday. I won't say it again because I don't want to get demonetized on YouTube. With theft, let's just call it. I felt really, really proud that I got away with, I don't know. I felt like I pulled a hat trick because I traded this thing long here, rode it all the way up. Good earnings, potentially, good signs from the Federal Reserve, and then all of that erased, but I was able to trail a stop. I took my profits and the market rolled over. So now, as prices dip back down, I'm feeling pretty good because I missed out, or in the best possible way, I missed the carnage of the Fed meeting yesterday on the long side. Now, I wasn't short, and I very rarely will short the S&P, to be completely honest. if I'm short biased in the S&P, I'm usually buying the dollar, but we're going to watch this going forward to see how this level reacts. Yesterday, we had a little bit of reaction off this 4070 mark. Now the question will be, can we actually break down? Now, if this breaks down, guys, it's probably going to be accompanied with some real interesting moves in the market. One move that I'm going to keep coming back to probably a lot today is what happened following everything yesterday with the gold market. Now, I am more bullish right now on gold than I have almost ever been ever. And the reason for that, if we're listing some scenarios as to why I'm so bullish on gold, let's do that now. Why am I so bullish on gold? Well, first, banking fears are immense right now. Okay, the banking fears that are going on, the regional banks. Now, if you don't know what a regional bank is, there's the major banks, the huge banks in the United States like JP Morgan, Citigroup, Wells Fargo. Those are the major banks. But the regional banks are collapsing here in the United States. We have several that have gone under. And yet again, we had fears surface with another regional bank, PacWest, PACW is the stock ticker, which traded after hours yesterday, went from $6.42 a share down to $3.88. This is the stuff, guys, that causes gold bulls to go crazy, because banking fears, if there's collapses there, this could become a bigger financial sort of situation. So as I look at the gold market, the banking situation is scary, but there's also recession fears, the big R word. There's recession fears. There's worries. A notable one, the debt in our country, in the US, and the debt ceiling, and the almost certainty that they're going to raise that debt ceiling yet again, right? They have to. It's how our system operates. So anyways, my point with sharing this with you guys is all of these are fundamental catalysts. I go through Twitter, and maybe that's my first mistake, is I scroll through Twitter. I've become more and more addicted to Twitter over time. Well, Twitter has become so, interesting in the trading space. Some people say fundamentals do matter. Some people don't say they don't matter. What's going on right now is very, very important fundamentally to the price of gold, to the dollar, to the S&P. And as John Tooth in the chat says, Domino's. I don't know if you're talking about Domino's Pizza or if you're talking about the dominoes are lined up for some serious trouble. But there's a lot of stuff that looks very, very sketchy. And I'm not an overly pessimistic person. You get the perma bears in the market. But this stuff right here creates very, very heavy upside pressure for the metals market, in my opinion, as people may look to them as safe havens. Yesterday, with the sign of more rate hikes, gold went up. And if you've been watching the markets, then that's sort of an anomaly. That's a newer concept to recent developments, showing gold retaking its spot as a risk-off asset. So that's why I'm bullish on gold. Ducks in a row. John, I hear you. I hear you on that one. So my point here with this is that gold on pullbacks looks really interesting to me. Last night, we retested just shy of the all-time high. If price is pulling back now into this level, I'm pretty interested. Now, I'm going to try and be stubborn here and see if I can get a deeper retracement yet again. I'm going to try and play this patiently. I'd be interested around 2015, right? Somewhere around that level. If we can get a deeper retracement, I believe that brings us to a 50%, just shy of a 50%, about a 61.8% retracement on this big pop, right? Because I don't want to chase the pop, but I think you get really great, in my opinion, I think I get really great risk reward around this 61.8% retracement and looking for us to run back up to those all-time highs. Now, again, this is my opinion. Yes, we got unemployment claims. Thank you, Jason. Let's do our breaking news. Unemployment claims coming out here in just a moment, guys. Thank you, Jason and Chandler, for that that setup. We're now taking a look at unemployment claims. Again, Fed has shown its willingness to focus now on the data very heavily. So this makes this increasingly interesting, I think, to the markets. We're pending here now on unemployment claims this morning. And if anybody has numbers earlier than Forex Factory, please feel free to share them in the chat. And again, unemployment claims, what we're paying attention to here. Following that, we also have the ECB press conference, and there it is, about as expected at 242,000 jobs, unemployment claims, compared to 239. So nothing too surprising there. Probably shouldn't be too much of a market mover there on the dollar. So here's your 15-minute chart. Yeah, so it was moving up prior to this, has not made too much of a substantial move on that release. Here is the dollar on the hourly chart. And so again, dollar came down, broke underneath briefly, and I actually would like this dollar to get a little bit of a bid here this morning to hopefully help me get into my trade that I want on gold. I'm trying to be patient, waiting for some sort of a pullback to that 61.8% retracement, as I mentioned here just briefly ago. So that's a trade I'm looking at. S&P 500 is also something on my watch list. The S&P trading around 4,081 here, just shy of major support that we've had at 40.70. The euro dollar here, euro dollar tumbling back down after briefly trying. You had a little bit of a false break here to the upside, whatever you'd like to call it. Doesn't matter. People like to come up with fancy nicknames, you know, for this sort of move. I just call it a fake breakout, right? It tried to break through higher highs, and ultimately did not quite succeed and tumbled back down. Where does the euro go from here? Well, again, today's refinancing rate came out pretty much as expected, with the ECB coming out at 25 basis point rate hikes. Again, they have the press conference at 8:45, which could be very interesting. So yeah, European Central Bank set to slow rate hikes. That accompanied with a bit of dollar strength is interesting here. Euro yen. What is with everybody asking about euro yen? What's going on there? Euro JPY pulling back here to key support. Let's see. Is euro yen at a good place for longs? Let's look. So pulling up euro yen on the edge finder here. Euro yen longs. Yeah, honestly, I don't hate this at all. Euro yen looks like it's finally giving us that retest that we talked about yesterday. This looks like a 50% retracement. Okay, it's actually just shy of a 61.8% retracement. Yeah, I don't hate longs here at all. Now, of course, I need to clarify when I talk about this stuff on my channel. This is not financial advice. I'm not here sharing signals. If you are looking for somebody else to do all the work in your trading, this is the wrong industry for you. This stuff is a lot of work. It's not easy and it's hard. So, you know, please do not take, just because I think, hey, this might be an interesting trade setup, does not mean it's a guarantee that it's going to work out. I do think euro yen just shy of 148.296. I like this as a possible long trade. We're coming into a level of what was resistance, could turn support. I am also, as I mentioned, my number one favorite trade right now is looking for that gold pullback, which we discussed on the watch list as one of our hottest buy setups. Real quick, guys, I want to make an announcement here. We are doing a Bitcoin giveaway for $500. We shared this announcement yesterday. I want to make sure that any of you guys that want to join the Discord, the Bitcoin giveaway, we're giving away $500 in Bitcoin. If you would like to enter that, Here's how you can do it. Click this link. It just got dropped in the chat by my producer. Chance to win $500 in Bitcoin. All you have to do to enter is send us a direct message. Click that link, open that up, and say, I want to join the giveaway. We're doing $500 in Bitcoin giveaway here this month. If you'd like a chance to win, all you have to do is send a direct message to our team. We got people in the office who are going to get you tallied into the system. So click that link right now. It's going to open up a chat window, and just send your message there, and you can connect with one of our team members to get your chance to win $500 in Bitcoin. And part of that is we had a really big, boost on the channel. We had a lot of new subscribers, a lot of growth recently. And as a thank you, we're doing our giveaway. So do not miss our $500 Bitcoin giveaway. There is a true Bitcoin bull right there. When they say don't quote it in dollars, quote it in Bitcoin. That's a true Bitcoin bull. Speaking of Bitcoin, what's going on with the price of Bitcoin here this morning? Curious to see if there's any overlap when it comes to this stuff. Again, gold shooting up, and Bitcoin's seeing a little bit of a lift off with that. Not nearly as much though as gold and silver. Silver pulling back down to 25.53. Interesting there. Silver market. Not quite at the high. Well, that's not even close to all-time highs. All-time highs on silver are like $50. So we're very, very far from the all-time highs. However, gold doing its thing here. I mentioned, guys, for those of you who are just tuning into the stream, we're looking for pullbacks to that 61.8% retracement. That's where I'm really interested in trying to take a stab at a gold long trade. I will be watching out for that probably the remainder of the day. The S&P 500 is also something I'm keen on watching. I'm not really, to be completely honest with you guys, I'm not super bullish on the S&P. I mean, we still, you heard Jerome Powell yesterday. We had expectations, not necessarily, many people were forecasting yesterday that rate hikes were going to sort of get paused. Well, that language went out the window when Jerome Powell basically said, we don't necessarily think it's appropriate to just call it a pause here. We have, we're going to be very data driven. And when they say data driven, what that means is rate hikes are not off the table. Rate cuts are, well, actually, Jerome Powell later on in his speech went on to say rate cuts are probably not appropriate. So you have a lot of headwind for the indices, in my opinion, right now. That I'm personally going to sort of I'm going to be on the sidelines for that. However, a gold trade is something that I'm very intrigued by and will be watching out for. If I take that trade, you guys will see it inside of the Discord channel. So all of the trades that I take are shared inside the Discord. So I told you guys I was long S&P earlier this week. I got trailed out just before all the carnage, which was amazing. I've been bragging about that for the last couple of days. Got to pat myself on the back yet again. But it did feel really nice. I trailed out of my winning trade before the drop, which of course, when it happens, it feels amazing. When it doesn't happen, it feels terrible. So I just completely, transparently, I don't play every trade perfectly. And if, I wouldn't be doing this for so long if I tried to hold that claim or demeanor with me all this time. The reality is we all take losses. We all deal with, wins and losing streaks. Some people in the audience asking about yen crosses here this morning. What do you think about yen crosses? Dollar yen looking really interesting on a pullback here. Dollar yen 134.63. This is a big pullback. And part of this yen strength here is due to the risk-off nature that we sort of saw markets get taken over by. Frank and Ivan came on the stream yesterday, and they talked about pound yen and euro yen. Frank was looking at euro yen. And I think euro yen is getting real awfully close to a level I think I'm going to have to take a trade on. If I take that trade, you guys will see it inside of the Discord channel. I'm watching that here this morning. I'd like to see on the lower time frames if we get some sort of reaction. If I take this trade, If I take this trade, it's probably going to look something like this. Stops below and looking for a return back to the highs. I mean, this is more of a swing trade. Yeah, that's right on the money there in terms of ideas. So again, this is a haircut off of the highs here. Pretty good. SPY also selling off, still staying down low, GLD. The reason I'm going back and forth, guys, is because I'm weighing which trades I want to focus on most. And I do really want that gold trade, but it's a bit of a ways away. Euro yen looks interesting. You also have what's going on with some of the Aussie pairs. We had some interesting stuff from the RBA recently. Surprise rate hikes. Seems to be a little bit muted still, despite that. Pound looking real strong here. For the pound bulls, should be interesting to see if we get any pullbacks there. Drop the likes, guys. If you're enjoying the stream, hit that like button, thumbs up button, subscribe if you're new, all that good stuff. Also, a quick reminder, again, we dropped it a second ago, but let's do it one more time here. If you guys are not already in our Bitcoin giveaway, we're giving away $500 in Bitcoin this month. That is $500 that we are giving away to someone lucky in the audience. If you want to join the Bitcoin giveaway, it is so easy to join. All you do, click that link. It just got dropped in the chat. If you've already joined, there's no point in joining again. It won't help your odds. But if you're just tuning into the stream, join our $500 giveaway. We're giving away $500 in Bitcoin this month. So make sure to join that. All you have to do, click that link, open it up, chat with one of us. We've got support reps in the building who can help you out and get you into the Bitcoin giveaway for a chance to win $500 in Bitcoin. NAS 100. Let's see what's going on with the NAS. NAS still taking a little bit of a beating here. 4-hour chart. Man, I was really, really bullish on the NASDAQ. It just didn't hold the way I was thinking it would. I figured we might have a bit of a launch pad if the Federal Reserve, Jerome Powell, if he came out and said, like, we're going to pause from here. That would have just been a beautiful thing for the indices. But he didn't. And in fact, he sort of said to the contrary, we're going to be data driven and, you know, rate hikes are not off the table. And that, yeah, that's big. Do you want a software engineer in your company? Via Music, thank you for the offer, but we have several already behind the software tools that we build. Myself, I have a background in software, but also we have a developer and then a designer and then a team of people behind the products that you guys see on the channel. Speaking of products that you see on the channel, I did want to take a look. We were reminded yesterday by Frank. He talked a little bit about, for the currency traders out there, I want to show you guys something. The Japanese yen continues. For those of you who are like wondering about the Japanese yen, institutional money is super, super short on the Japanese yen, which I find very, very intriguing. You also have the Canadian dollar. For the currency traders in the building, the Canadian dollar, very, very short. The euro, very long. Gold, very long. The dollar, very long. Why do I point this out and where do I get this data? Well, this is from the COT report. The Commitment of Traders data comes out once a week, and we import that and we visualize it for traders. Again, we're a software company, Atlanta, Georgia. We build tools for traders. And when we're looking at this data here, this is showing us what institutional traders, where they're positioned. By the way, guys, we do have the press conference. I'm not going to watch it here on the stream, but I'm going to look out for headlines and give you guys my findings here as we go into the ECB press conference and continue to watch the charts as we sort of go into this. Back to what I was saying, speaking of the ECB and the euro, institutional money is positioned very long on the euro, which I find very, very interesting. So what does this tell you? Well, for me, I mentioned that I'm very long biased on gold, right? I don't, for the newer traders in the audience who show up to my stream, many times people will ask like, well, Nick, do a technical analysis breakdown on something. And I do technical analysis quite regularly on my content. I use simple support and resistance, market structure, the simplest stuff out of the box. You can call me a retail trader, whatever you want. I don't really care, because at the end of the day, I've been doing this for a while. I've been doing what works for me. And one thing that works for me well is combining technical analysis with real world forces like fundamental analysis, but also taking a look at what institutional money is buying and selling has been a valuable resource to my trading. So right now, through this data, we've got insights showing us that institutional money is very long gold. And I want to show you guys something here. Retail traders, we talked about this yesterday. They're very short on the indices. But let's also go take a look at some other things. Let's go look at commodities for a second. We've got gold. We've got oil. So reading into this, the oil market in terms of retail traders, 67% short. So retail traders are betting heavily against the gold market. That's, to me, really interesting. Now, flip it around, though, and look at oil. 87% of retail traders' positions are long on oil. This is notable. This is really, really key. Because if we know the retail traders are buying oil and selling gold, my opinion is that this lends more towards bearish bias on oil and a bullish bias on gold. Why? Because we know, and regular viewers, you can say it with me at this point, you know what I'm going to say. We know that retail traders tend to lose money. 90% of the time they lose money. 90% of the, all retail traders, they lose money, right? This is posted from brokerages all around the world that disclose that information. Retail traders lose money. So if we know that retail traders are all buying oil right now and shorting gold right now, that's a major red flag to be joining that trade, in my opinion, right? So when I look at this, we know institutional traders are long gold and we know retail traders are short gold. That to me adds so much confidence to looking for long trades. Now, when I say confidence, what I don't mean, oh, now I'm going to go all in because this can't fail. That's not what I'm saying at all. I'm still risking. I trade with a larger size portfolio. I don't need to be trading with large risk in order to make decent profits. I'm fortunate enough to be in that position. And adding to that, when I take trades, I might risk 0.25% of my account. That's still very worthwhile. So I'm risking really small, even though I'm feeling confident about the trade. This is the difference, I think, between newer traders and people who have been doing this for a long time. Newer traders think that, because that data that I just shared, this is going to be a certainty and that this market's going to fly up guaranteed. It might go up, but it's not guaranteed. And we need to be very risk averse if we're going to stick around for the long term. Guys, I've been doing this for 7 years, and you do not do this long by throwing your account around with big lots or big size or contract size or shares, whatever you're trading. You do not last long if you do that. The only way to last long is to risk very small and compound your gains over the long term. If you understand that and you agree with that, give me some yeses in the chat real quick. Let me know. And let's see if we have any updates on this. So the ECB raises rates by 25 basis points. Pretty much in line with expectations. Policymakers noted that inflation has declined, but underlying price pressures remain strong, while past rate increases are already weighing on financing and monetary conditions. So where does this take us? Well, it seems like from the ECB, from the Fed, we're at sort of the tail end of this rate hiking process. But the fact that Jerome Powell yesterday with the Fed didn't rule out further rate hikes caused the markets to be a little bit fearful. And for good reason. So this is KRE. This is an ETF that tracks regional banks. As we were talking about earlier in the video or in the stream today, regional banks are under pressure. And regional banks are the smaller banks that make up many of the banks in the United States and all around the world. There's smaller banks, right? Well, regional banks are under massive pressure right now due to the rising interest rate environment, where many of them are exposed to, many of the very overpriced bonds that they bought several years ago, right? People buying 30-year, or small banks buying and exposing themselves to 30-year bonds several years ago when they were yielding practically nothing. Now people want their cash back. They're pulling money from the banks. It's causing real panic. And major banks are doing okay, but regional banks, many are going under. They're at this point. We mentioned earlier in the stream, PACW. This is Pac West Bank. It's a California bank. Yet another one to come under serious scrutiny, under serious pressure, and it's raising alarms that are causing the gold market to rally strong. And again, many traders, sometimes I'll get comments when I go through like a stock or something, and people say like, get back to gold or get back to currency pairs. What you guys need to understand is if you're really going to be a fundamentalist, a trader that looks at more than just technical charts, you need to understand the full story of the markets. Stocks, indices, cryptos, commodities, it doesn't matter. They all are like cousins in a big family, and understanding the whole picture is really important. So, yeah. Let's see if we can find anything else to pay attention to here in terms of updates. I feel a quick ad coming on. Ooh, yes. Guys, we've got a sponsor that we need to announce, and we got a brand new commercial for you. Let's go ahead and run that commercial. We'll come right back. We'll talk a little bit more about this gold development. Check it out.
Attention A1 Trading Show fans. If you're looking to get funded, we've got the solution for you. Our partnered prop firm Superfunded helps traders get access to up to $200,000 in trading capital. The reason we chose Superfunded is because they offer traders reasonable challenge rules, a 90% profit share, up to a 1-to-30 leverage, and so much more. For a limited time only, get 10% off any of their account challenges with promo code A1 Trading. They offer various account challenges for various account sizes, so you can choose the perfect fit for you. Again, that's 10% off any account challenge with promo code A1 Trading. If you're interested in this offer, go ahead and click the link down in the description below. Now, back to the A1 Trading Show.
Wow, wasn't that impressive? Very well done to Mr. James on the producer side. You guys know and love him. He shows up on the stream every day. He's our news reporter, and also on the the back end reporting side. So great commercial there. Thank you for that. And guys, remember, check out Superfunded, as James was sharing in the video. They are a partner prop firm here on the channel and help to make all of these streams possible financially. So thank you to them. So let's keep going. Is the ECB hawkish or dovish? Let's look at the euro. Probably a good spot to start. It doesn't seem, just based on what's happening with the euro right now, to be overly hawkish. However, if you guys were watching yesterday's Fed meeting, which I'm sure many of you guys were here, even on the live stream, things were all over the place, right? There's no clarity until something decisive is said. We'll see if we get something by that. But yeah, where do you see yourself on natural gas? Well, in terms of my answer has to sort of follow with what's going on with the oil market, which is looks really under pressure. Natural gas, same thing. Not something I really trade. If I'm looking at oil, which is something I periodically will trade, this thing is getting crushed. Recession fears lighten this thing up, and with hawkish remarks yesterday, it doesn't look very promising. We also just mentioned that retail traders are super long on oil. A little bit concerning there, in my opinion. So I'm going to be careful there. Guys, for the newer people just funneling into the live stream here, we have a Bitcoin giveaway that we're doing here. I keep reminding people because I want people to get in, and I don't want people to feel like they missed out on the chance to win. We're giving away $500 in Bitcoin. $500. I feel like I'm like an auctioneer. They're like 500, 500, 500. They talk so fast. We're giving away $500 in Bitcoin. All you have to do To join the Bitcoin giveaway is click this link. It just got dropped. If you're watching on your desktop, it's to the right. And if you're watching on your phone, it is just below in the chat. So in the chat, click this link. What it's going to do is it's going to open up a live chat feature with our team. If you send our team a live chat message, they'll enter you into the giveaway for a chance to win $500 in Bitcoin as a thank you to our audience here today. Pound shooting up here, still very strong. In terms of currencies, the pound looks really interesting recently. Ivan made some great points when he was discussing this yesterday. He was talking about how, when you're looking at the pound right now, the UK is stuck above 10% in inflation. Really, really red hot problems with inflation. Meanwhile, the it's not necessarily a dovish Fed, but it's maybe a less emergency status, I would say, Federal Reserve. I don't know. It is up for interpretation. Regardless, the UK has very high inflation. It's very likely that they're going to have to keep raising rates on, and there's possibly some upward pressure on the pound for that. So we'll maybe give some commentary on that in just a bit here. Dollar yen is shooting up. Yeah, dollar yen holding support here around 134.8. That drop off was crazy, by the way. That jump, it's a 475 pip jump, followed by a 360 pip drop. What a crazy, crazy event. See what's going on with the NASDAQ. I mean, you guys know I got to keep I got to keep like one eye on the gold price. I feel like I'm like a crazy pirate. You know what I mean? Like I got to keep one eye on the gold price. But it's because I've mentioned this for the newer people funneling into the stream here now. I'm looking for a retest at that 61.8%. At that point, I will very likely be looking at gold longs. So we'll watch for that. Nick, you bullish or bearish on gold? Very bullish. Now, I have to be careful whenever I say something like that to the newer traders in the audience. I am not telling you that there is a certainty that gold goes up. When I say, and this is important for everyone in the audience, when I say I'm bullish on something, right? Like let's say I'm talking about a trade setup where I want to go long gold. The reason we put stop losses on trades, when I take a trade and I put a stop loss on my trade, why do we put a stop loss on a trade? To stop loss in the situation that we're wrong. I'm wrong sometimes in my trading. Actually, pretty often I'm wrong. I tend to go for big runners. And so when you trade like me, if you trade similar to me, then what you know is that it's rare to catch a really big runner. It takes a lot of patience and a lot of time looking for great trades. And then eventually you find one and it's awesome. But along the way, 2/3 of the trades that I'm taking might end up in break even or losing positions, right? But that one trade makes it all worth it. So I like to trail stops. For those of you who are newer to my channel, I like to trail stops. So like, for example, let's just say this price comes down and I get my entry and we start going great on the gold price. What I'm going to try and do is I'm going to try and trail my stop loss. Let's say my initial stop loss is here. At some point, I'm going to try and take that stop loss, take it to break even. And then from there, I'm going to try and see if I can lock it in behind market structure lows. My goal is to try and hold on to a trade as much as possible because of the rare situations, but the important situations where sometimes you just get straight shooters. Like, so for example, let's say you were trading gold long and you caught, let's just say you caught the move and let's say you're in long right here. Okay. So you go long gold and price shoots to the moon, comes back, puts in a new low and shoots higher. Instead of just taking a profit here or trying to call where it's going to top, my goal is to try and trail that stop loss, lock it in behind market structure and ride it higher. So as long as this thing wants to keep going, I'm going to try to stay in the trade. Many traders, most traders, I would say, they try and use take profits. And I don't think that there's anything wrong with using a take profit. If that's something you prefer, then by all means, do your thing. But for me, I like to trail stops because I don't know how far a trend, an explosive trend for that matter, can really go. let's say price pulls back on this gold chart and I get my entry and this thing goes back to the highs. Am I going to close it at the highs? No. Is that a major resistance? Sure it is. But if that major resistance breaks, the sky's the limit on something like that. You could have a quick run up to like 2,300, right? On gold, we could put in a brand new high. So my point with saying that is I like to trail stops for max potential. And what I sacrifice in exchange for that is sometimes getting trailed out early, sometimes getting stopped out for break even. I am willing to accept those cons for the potential pro of catching the great trends that sometimes occur, especially in markets like gold. What if gold goes up before the 61.8% retracement? Now gold struggles to break the 50%. So if that happens, I'm going to probably put my hands in my pockets, stare at my shoes, and kick rocks around. I'll be a little annoyed, but it happens sometimes. My point is I don't try and play it perfectly. I try and catch the trades I'm supposed to be in. I like this pullback. I think it's a good trade. If I miss it, I miss it. And it will suck and I'll be sad. But actions are more important than sometimes being a little annoyed or, pretending you don't get annoyed by trading is, I think, sort of ridiculous. What matters more is what do you actually, when it's time to make decisions, what do you actually do? We're going to bring in a guest here. I'm going to say hello to Marko today. So Marko, I don't think I've actually had a chance to say hello, Marko. Marko, how are you?
Hello, I'm good. How are you?
Good. I can see some of your content. You do a great job, and thank you for joining me on the show today.
Yep, no problem.
Hey, Marko, so walk me through what have you been paying attention to? I can't stop looking at the gold chart here today. Anything? What are you looking at today?
Yes, I'm trading mostly Forex or only Forex. And today I'm looking at the euro and the Japanese yen.
Okay.
So only the 1 hour chart. That's what I'm looking at. Basically
Are you
on
looking...
EJ.
Yeah, go ahead.
Yeah, only the 1 hour. And I'm looking for descending structures or ascending structures. So for example, right now I'm seeing a descending channel forming, which often signals to me a reversal to the upside. So I'm looking for momentum to kick up to confirm a reversal, and then I would be looking to buy. Yeah, exactly. So that's the channel.
Gotcha. Yep. So you're looking for something like a breakout.
Yeah, basically like a breakout and momentum, and then a break and retest or a flag formation, any of the two. So like a small pullback to get in.
Fair enough. Got it. Yeah. No, the yen crosses have been wild. So you're trading off the 1 hour chart. Do you usually look at higher time frames than that, or are you
only the 1 hour? Yeah.
Okay, gotcha. Yeah. So we've been in, to your point there, beautiful downward structure here. The last day or so, ever since we had the Fed meeting, which really continued to push it down. But to your point, if you get sort of that structure breaking out to the upside, you have sort of a runway here in front of you just to bring in the higher time frames. The 4 hour chart also looks really interesting as well. I think, you're coming into a level of support here around that 148.5 level. We're seeing some reaction already. Should be very interesting to see if there's some sort of breakout like you're talking about on the lower time frames going into today's trading action. So yeah, Marko, you're a regular on the channel, so you know kind of the drill. You get a chance to take over for a little bit, go through your charts, and share with us. I'd love to see more from you there. So if you want to share your screen, you're welcome to take over here for a little bit. And while you're doing that, I do want to remind you guys that we're doing our $500 Bitcoin. Before I step out and give the floor to Marko, remember, guys, we are doing $500 in Bitcoin giveaway this month. If you want to join that giveaway, we've got a link being dropped in the chat right now. Click that link. It's in the chat. There it is. Click this link. Send us a direct message and ask to join the giveaway, and you'll get a chance to do that. Marko, take over the stream, my friend. Thank you for coming on. Yep. And one last thing I'll say before I step out is, guys, stick around with Marko. If you enjoy his content, make sure to go subscribe to his channel and find more videos, more footage from him throughout the week. Marko, have a great stream, man. Thank you for coming on.
Thank you very much, Nick. Thank you very much. Goodbye. Okay, guys. So as you know, only the 1 hour chart, only 6 pairs. So EU, EJ, AU, AJ, the pound, and NJ. If you have any questions, of course, just put them in the chat. If you have any requests, also put them in the chat. Of course, we will get through everything. So let's just quickly repeat EJ again. So the methodology behind me looking a reversal up is basically prices struggling to go down. So most retail people probably bought somewhere here with their stops here, or probably bought somewhere here because they saw momentum, put their stops below. Also, some of them probably saw this huge wick, then bought right here with the stops below. And each time they got stopped out. So the bigger players are kind of filling up their positions, stopping retail people out, just struggling to go down. And that's the methodology. Once the momentum eventually kicks in, once we get a signature of the bigger players, because of course we need to follow the bigger players, the retail cannot create any of these moves. All of the bigger moves are the big players. Once we get the signature, then I will look, of course, to get in either on a nice flag or on a nice break and retest. Or if a trend starts in this direction, I would be very interested to go long anywhere inside of the trend because we have the power of the descending structure. Okay, so let's take a look at your comments. AUD CAD for sure. So most of these requests I don't trade live, but again, I'm going to give my perspective as a trend trader, swing trader, and I'm going to give it on the 1 hour chart. Aussie CAD seems to be pausing after a move up. Overall, we did have this larger descending channel right here. So I kind of was expecting this to move up. And as you can see, we got some big momentum. You can see it in these big blue candles. Right now it's pausing. So right now, pausing. And I would need to see a breakout to the upside or to the downside. So I would just look for momentum up and then an entry or momentum down. Of course, my overall bias or the probabilities are that this will actually go to the upside. So if we get momentum up, I would be more interested in buying than in selling. Okay, EuroCAD. Let's see it. EuroCAD, this one looks very interesting. This one has gone from a descending structure right here into this sort of an ascending. Now that is not such good price action. It's kind of signaling possibly a bigger, larger range. But again, that does not make the trade invalid for me. So after this ascending, I would still look to sell. And now we're getting some nice momentum down with this red candle. So why is this nice momentum? Because we'll just take a look at the size of the candles. It's much bigger than anything in the prior price action. So I'm definitely interested in selling because I'm seeing some big selling pressure. Okay, now some buyers are starting to step in. So for this one, my bias is to go down, or probabilities are this will go down, but the live candle is not looking that good. USD JPY. Okay, for sure. USD JPY, very descending, very descending. I really like this to reverse. So struggling to go down, struggling. Basically, I'm expecting this to reverse. But again, I would like to see some strong momentum. I would like to see a strong push such as this one, basically. And then a pullback or break and retest. Something like this, one of these candles, or maybe even two in a row. That would be good. That is some strong momentum. Then you know that there is real conviction from the big players. See these smaller moves, that's kind of what you don't want to see. That's weakness. So this one, probabilities are this will go up. Hello, Mark, I like your analysis. Yeah, no problem. Thank you for the feedback. Okay, Euro US dollar. See, this one I actually trade live. So EU is what I trade live, and it's currently heavily rejecting. Heavily rejecting up. This one, to be honest, I was expecting this move up. I did not get an opportunity to buy anywhere here, unfortunately, but again, we had this descending, so just goes to show that after you get a descending, prices was struggling to break the major lows, as you can see here, basically barely broke, retraced, and then we got the indication of big players or big buying pressure in these two candles. Look at the size of the two candles, just look at the size of the move, compare it to the move prior, basically definite conviction from the buyers. But again, saw no high probability entry point right here, and then we basically ascended. News candle, so I don't look at news personally. I only don't trade NFP. So tomorrow I'm not trading from 9 a.m. or 8 a.m. London time. That's the only news I look at. NFP, anything else, I just trade through it and don't even pay attention. But I know from my backtesting that this is a news candle. Huge wick up, huge wick down. Usually those are very bad candles. Usually they signal a larger, wider range. As a trend trader, I don't want to be in a larger, wider range. So we broke the low, retraced again. Now we are reversing back up. So this is, no one is winning here. The buyers are not winning, the sellers are not winning. It's just a volatile battle, and I just want to keep out of this price action. What am I waiting for? I'm waiting for the price to clean up. I'm waiting for the price to move away, give me a nice push up, or give me a nice push down. Example here. Actually, example would be in March, where I took a trade. This would be an example. For example, this was a trade. Nice flag. This is what I want to see. Legs such as these ones, this one, that's some super high probability price action. So being more patient on EU. Okay, US dollar JPY. So you're long on US dollar JPY. Do you agree? Well, my bias was for it to go up, but you need to stick to your own plans. So don't execute any trades unless you're on demo. Then you can experiment as much as you want. But if you're live trading, don't take any trades that you're not 100% sure about, that you haven't 100% researched. So yes, my bias is for this to go up. But again, my win rate is around, what is it, around 30%. So in most cases, I'm wrong. But when I'm right, I make much more money than when I'm wrong. I lose 1% per losing trade, and I win around 8% on a winning trade. So my average risk to reward is around 8 to 1, and my average loss is, of course, 1%. Okay, yeah, so I'm guessing this will go up, but don't take this as a signal. Just keep following your own plan. US dollar CAD. This one, range bound. I don't personally like this price action. It's kind of moving down, ranging, moving up, ranging. So not for me. This is very range bound price action. No conviction. Push up, range. Push down, range. Push up, range. For us trend traders, this is our worst nightmare, I would say. Not good to take. So I would wait for large momentum up or large momentum down. Okay. Let's see some of the chat from the other stream. So Amori says, I've been trading profitable for months now and I feel ready to take a funded challenge. Do you have any advice for me how to go for the funded challenge? Do demo first. So you have FTMO demo challenges. If you can finish 3 FTMO demo challenges, they do not have to be consecutive. So you can pass one, then fail one, pass another one. But in 1 year, if you can pass 3 challenges on demo, which are free, then I would say you're ready to take a funded challenge. If you don't have any live trading experience, if you have not had any demo trading experience, I would not buy a challenge. Definitely not buy a challenge. So only after you get live evidence that you're profitable in live trading, because backtesting and live trading completely different. Completely different. Okay, what percentage do you average monthly? 5 to 8% on average. Again, some months I'll make a lot of percentage, some months I'll be down, some months I'll be break even. Most months I'll be around break even, I would say. But again, 2 or 3 months per year, I'll make a lot of percentage, and that's what makes my year as a swing trader. Okay, Aussie JPY. Aussie JPY, I actually trade alive. So let's take a look at this pair. Let's see what this one is telling us. I did take a trade here, a flag, and it was running some very, very good profit. So let me go through the methodology why I took it. Heavy uptrend, heavy uptrend, great clean price action. I was really liking this price action. Strong momentum, no momentum shifts, no signs of selling pressure, no big red candles, only small red candles. And then we got a nice flag formation. Price was struggling to go down. Here is the flag. First low, first high, first low, second high, second low. Entry candle is the first blue candle after the flag forms. No selling pressure in it. And price did go up. It was running around 10%. As I use a trailing stop loss, and I only move my stop loss when the price creates a new most recent low. So in this case, price just reversed and I wasn't able to reduce my risk. So I got taken out for reduced risk. I moved my stop loss underneath this because this was the most recent low. I actually got taken out for a loss. So that happens with using trailing stop losses and fixed mechanical rules. But again, most of the time, it will enable me to maximize the percentage out of a move. But I have had experiences where price just goes up, goes 8%, 10% in profit, and then just reverses back down, takes me out for a loss. Again, everything in trading comes with a sacrifice. So nothing is for free. If you have some benefits, you will have some drawbacks as well to any sort of an approach to trading. In this case, the trailing stop loss rule is great, but sometimes it will go up and then reverse and take you out for a full loss and not give you that pullback and then a break of the high so that you can reduce your risk. So it happens. It's part of trading. Right now, my analysis on Aussie JPY is usually this sort of pattern. Price goes down. V reversal, range, push down. Price usually continues moving down. But right now, I'm seeing more range-bound characteristics. So I don't really like how we move down and then retrace back up with this aggressive retrace. I'm expecting a larger range in this area. Okay. When you get the large momentum down and you get an aggressive retrace, meaning buyers starting to step in, usually it signals either a reversal or a larger range. Reversals usually happen quickly, so you just get a push up like this. This is more an indication of a range. So I'm expecting range-bound price action on the 1 hour chart. I am looking to see if this will continue trending down like this. Then I would be very interested to sell. Or if this will go up, then I will be looking to buy. But my bias is for this to go down as the overall move is down. Okay, let's continue with the requests. New Zealand CHF. New Zealand CHF. Okay, let's see it. This one, okay, it's forming a nice pattern. It's forming a nice pattern, and that is a V reversal. Usually when you get a move down and move up with same sort of momentum, but this leg of the V is stronger or goes higher, as you can see, it broke this level here and continued. Usually what happens in most cases, like 70% of the time, this continues trending up. That's what happens most of the time. Right now, I would not be looking for an entry because of the double wicks. Double wicks are a warning sign, but if this continues, gives me a nice clean close without a wick, I would be looking to buy. So my bias or the probabilities are this will continue trending to the upside at least a bit more. I feel like EJ is at a good place at 149 for a buy stop with 7 pip take profit. I think your take profit is very, very small. I think you should use a bigger take profit. I definitely believe you should use a bigger take profit. For me, EJ right now is looking, well, it's looking descending, but again, I want to see more momentum going up. I want to see some conviction. I want to see it break this level and give me a nice clean close. Give me a nice strong blue candle like this red one, but just in reverse. You can see it closed without a wick. That would be great for me personally. Right now, it's more showing me some indecisive price action because we were moving descending, but then we broke the low, we broke the high here, broke the low again, broke the high, broke the low again, and this looks like it will break the high. Not very clean descending. A clean descending looks like this. Just breaking the lows. Only breaking the lows. That's a clean descending. Okay, EU we already did. EU is range bound for me. For EU, I'm looking for a large impulse up or a large impulse down. Thanks for explaining trailing stops. Though I don't understand it, do you also increase your take profit? I don't use the take profit. I never use the take profit. So for example, let me give you a quick example on EU, the trade I just mentioned. For example, this flag. How would I implement the trailing stop loss rule that I use? Well, I just buy here. I don't put a take profit in, so ignore this level. Price keeps going up. Okay, that was a bit too fast. Pulls back a bit. See, this is a bit lower than this. Breaks the high again, and then I put my stop loss underneath the low. So let's pretend this is my stop loss, okay? I just put it underneath the low, and I never use a take profit, and then the next candle took me out, took out my stop loss, and took me out for a, I think it was 4.5% winner. So that's how I implement. The trailing stop loss. Okay, I think it will be nice momentum on EJ finally. So Marko, you will wait for confirmation to enter the long trade. Yep, of course, I'm definitely waiting for confirmation. How does confirmation look like? Well, this would be nice confirmation if we get a move like this, or a move like this especially, or a move like this. That's what I'm looking for. This is just one blue candle, and it has huge wicks to the upside, huge wicks to the downside. It's looking more like a news candle. News candles signal a range. I don't like news candles. USD JPY short. Gold. Marko, do you have a channel of your own? Yep. So if you want to follow me, my YouTube channel is called Marko's Trading Journey. I believe the link is in somewhere in the comments. So if you want to follow me, go there. Aussie US dollar. Sure, let's take a look at the Aussie US dollar since I do trade that pair live as well. So for the Aussie US dollar, we have a move up, and then we have this sort of an aggressive retrace. So I was looking for this move to continue trending up, which it did not. Instead, we got selling pressure. So we got selling pressure here, which I don't like. I don't like to see selling pressure when I'm looking to buy. At this point, when these candles start forming, I just left this pair alone. And what did I just say a couple of minutes ago? Momentum shifts signal either a reversal or they signal a larger range. So right now we're getting a larger range. As a trend trader, this is not what I want to see. What I'm looking for is I'm looking for a large impulse up or a large impulse down. So this pair is not on my watch list. It's currently range bound, and I'm just being more patient, waiting for the break of the low, break of the high. I don't believe I will get any sort of entries because I'm not trading NFP. So I'm only trading today, and during the night I do wake up once per night, and then in the morning I stop trading because of NFP. Do you have some losing streaks? Yep, I have 10 trade losing streaks, 11 trade losing streaks. They happen. I have a So the strategy I trade is a low win rate strategy, 30% win rate. With that sort of a win rate, you will get some long losing streaks. You will get periods of losses, so they can last anywhere from a month, 2 months, maybe even 3 months. I only need those 2 to 3 months in a year where I make like 15, 20, 30% per month to pay off the whole year. So I'm waiting for those huge months, basically. And losing streaks, everyone has them, but especially the swing traders or especially the traders with low win rates have long losing streaks. Are you only technical in your analysis? Yep, so only technical analysis, no fundamentals, no news, no nothing, no indicators, pure price action, just the candles, and also these most recent high and low lines, but that I sometimes use, sometimes don't use. That's just kind of for me to more easily see the breaks of the lows or the highs. Marko, enjoying your views on the market, perhaps on Twitter? No, unfortunately, I don't have a Twitter. I only have a YouTube account and an Instagram account. So YouTube is Marko's Trading Journey. And let's do some more requests. Aussie CHF. So let's take a look at that one. This one, to be honest, it's kind of forming that V reversal that I was talking about. Sometimes you can get two types of Vs. You can either get a V that continues like this, and then you look to buy in this leg, or you can get a V and a range, which then continues also, and you look to buy here. This is kind of the same as a cup and a handle. So this would be the cup, this would be the handle. So same thing, just different name. This case, we're looking at sort of a cup and handle or a V and a range. This is the V, potential range, look to buy. So the probabilities are this will go up, but of course, I would look for strong momentum up confirmation. AJ, sell stop. Okay, let's see where you're selling, AJ. 8925. 89. Oh, so you're waiting for the break of the level. Well, okay, if that's your strategy, then definitely go ahead. Just make sure you're following your plan and you have back tested that approach for at least 5 years, I would say. At least the last 5 years, I would say to back test that sort of an approach. EJ, to buy. Still waiting for evidence to buy. Still waiting for that large push up. So not yet ready to buy, at least according to my analysis. GBP NZD. GBP NZD. This one, for me, it's kind of forming a V in the opposite direction. So V reversal here. Expecting this to give us a range, move down. If we get confirmation of selling pressure, then I would be looking to sell if I was trading it live, which I am not. I'm not trading this pair live. As a purely technical trader, do you sit out big news days like yesterday when the Fed rate decision posted? No, I just trade through everything. Basically, I trade through news. I don't look at any news. Most of the time, actually, news will benefit me. It will push the trade in my direction. Sometimes news will also take me out. I have had some instances where if I didn't trade the news, I would be still in the trade. So yeah, I just sit out. I don't sit out big news days. I just trade through. Sometimes it works, sometimes it doesn't. But I keep my winners much bigger than the losers. So in the end, it works out. Okay. And last question for today. Hey, Marko, do you trade on a specific time period or do you just check the charts every hour? What's your routine like? I trade only the 1 hour chart. I look at the charts 1 minute before the hour close. So I have an alarm right here, like on a Mi Band, which buzzes every hour. And I check the charts. It takes me around 30 seconds to check the 6 pairs. If there is a trade, put on the trade. If there is nothing, close the charts, wait for another hour, and then do the same process again. So that's my routine, and I wake up once per night. I trade throughout the whole day, and if I miss a trade during the night, that's just cost of business. So that would be it for my part. I think Miko will be the next guest. Hope you guys enjoyed. Hope you took some value. Thank you, Trader Nick and Avon Trading, for the opportunity. I will see you guys in the next live stream.
Okay, what is up, people? Hope everyone is doing good. So yeah, like always, guys, I'll go through some pairs I'm looking at for the rest of the week. Today's already Thursday, so we'll go through some pairs that I'll look for the rest of the week, Thursday, Friday, and also some pairs which I'm looking at for next week as well. If you guys want to ask any questions or looking at any particular markets, feel free to drop it down in the chat. We'll obviously go over those. So top of the watch list for me is currently Euro Yen. I've stayed away from Euro Yen because we just had the interest rate decision for it. But I'm still looking to long it. From a technical standpoint, everything is looking pretty bullish, and the higher time frames taking that to the lower. Monthly, confidently bullish. Weekly, confidently bullish as well. Daily, confidently bullish. And 4H is where I'm looking at my setup, and price is now at a really nice area of confluence. So for me, I'm just waiting for a good entry signal. Now that the news is passed and price is kind of settled for that, I am looking at some longs over here. So if I can get a good entry signal within the next maybe couple of hours, I will be looking to buy Euro Yen. But at the moment, price is kind of just here nor there. It's kind of messing around a little bit, a bit of consolidation, kind of flirting with that support level. I need to see a good shift in momentum, and then yeah, I will be looking for some longs on Euro Yen for a push potentially back to highs all the way up there. So just need to see a good bullish engulfing, and then I'll look to go long. So yeah, keep an eye on Euro Yen. So a really nice area. I do think we can see a bounce, but still a bit premature. Not seeing any good entry signals there just yet. So hopefully we can get a good buy. Pound yen I'm also looking at. Again, with the yen pairs, kind of a similar opportunity as well. Pound yen I'm also looking at a nice pop to the upside from 168. So hopefully you can see a bit more downside into this level. If we do, fantastic. If we don't, we don't. But yeah, 168 is my area of interest. And again, a very similar setup to Euro Yen, kind of the exact same trend line, same forceful movement through the highs. Looking for some retracement for a nice bounce to the upside from 168. So hopefully we can get another push down. Again, to be fair, it kind of counteracts each other, because if pound yen does have a push down, it means that Euro Yen might break through this. If Euro Yen decides it wants to start flying, we can get into the trade, but that means we might miss pound yen. And again, I'm only looking to trade one of the yen pairs. I'm not looking for, I'm not looking at to trade all of them, because again, they're mostly going to do the exact same thing. The yen pairs are going to rise together or fall together. So I'm just going to pick the best one I can find and just trade that pair. So yeah, Euro Yen, pound yen look good. Use cheaper, I do look good, but I want to see a bit of a push above that area. What's my entry signal? Entry signal is bullish engulfing most of the time. Bullish engulfing most of the time. 90% of my entries are on bullish engulfing, or bearish engulfing, of course. But yeah, I want to see a bullish engulfing, a nice big momentum candle, because right now you can see the market's kind of just messing around in this area, very choppy, kind of like a consolidation almost, with a slight descent to it, because the market's making some lower lows here. But yeah, if I can get a strong bullish engulfing, just like we had here as well, a nice strong bearish engulfing, if that can just print itself here, that would be exactly what I'm looking at. But if the market closes within this area, so within the wicks here, that is not a good signal for me. That's just price just kind of messing around, really. So I need price to clear this area here at 148.978. Nice confident candle closure above that, and that will be my entry trigger. I'll be getting to the market like so. Stop loss underneath the area, and then I'll be looking for a push back to the highs there for around 151.349. So that's kind of the plan for the trade. Whether we get the entry signal or not, that's up to Euro Yen. Still got 25 minutes left before that candle closes, so we've still got some time to wait to see how it's going to close. Even if this candle doesn't close with the bullish engulfing, we'll wait for the next one. I normally take my trades until 5 p.m. UK time, so that's when I stop looking for entries. At 5 p.m. UK time is in about 2.5 hours from now. So we've got this candle closure, and then 2 more after. If I don't get entry signal by then I'll call it a day and then look tomorrow during London session to see how things are shaping up. But nonetheless, price is at a really good area. Just need to wait for that entry confirmation. USD JPY also kind of in a good area, but it broke through my resistance. So I need price to get back above that area before I start considering to long the pair again. Had a really nice move to the upside last week, but now I'm looking to see if we can hold this area of support. Well, first to get back above it first, and then look to hold this area as support, and then get the next pop to the upside, because the structure is still pretty clear. Market still giving me higher highs and higher lows, so it's not very complicated, easy structure to kind of maneuver through. And we've just had a really aggressive move to the upside, pretty aggressive move back down, and the fact that we have broken under that support area is a little bit of a red flag, but the trend line's still holding. So if you can get back above 135, I'll start considering looking to long USD JPY again and look for the next bullish move. And again, I'll just pick the best pair out of them. So if Euro Yen does give me a signal for the next couple of hours or so, then I'll just probably just ignore USD JPY. So yeah, a good entry signal will just be like a good bullish engulfing or bearish engulfing candle, clearing out the highs of those candlesticks. If you have several JPY crosses that you're in your zone and with a signal, do you limit yourself of how many open trades you have, or just one, whichever one looks the best? Yeah, I mean, again, I don't want to over trade. Normally, I allow myself 2 open positions at once, but the 2 positions I have open at once are not in direct correlation. So I wouldn't have pound yen and euro yen open at once, but I can have pound yen and maybe NZD CAD, or pound yen and euro CAD, just different pair. It doesn't correlate directly. Obviously, there's some correlation to extent between most currency pairs, but as long as it doesn't include the currency itself or a similar currency, then it's okay. So if all yen pairs were in my trading zone at once and they all gave me the same entry signal, I'll sieve through them, see whichever one gives me the best in terms of the clarity and the entry signal, and obviously the risk to reward as well. Some yen pairs might give me a 1 to 3, others might give me a 1 to 5, and just generally in confluences, which one's got the most confluences and which one just shape up the tidiest. So at the end of the day, I don't really have a crystal ball, so I don't know which will be the better trade to take, because the strength of each currency will differ. Maybe pound yen's already pushing and euro yen's lagging behind it a little bit. There will be some minor differences to how they move, but again, the important thing is that we're managing risk and taking good setup. So as long as I take a good setup and manage my risk, that's all I really need to do at the end of the day. But yeah, I'll just pick the best one. But yeah, it would be against my plan to take 2 positions of the similar currencies. Bull engulfing on the 4 hour. You can use bullish engulfing on the 4H. On the hourly time frame is the time frame I use personally. I look at the 4H a lot, but hourly is where I look for my entries. So for Euro Yen example, I'll be using the hourly time frame. You can use the 4H bullish engulfing as well, but just hourly gets you into the trade slightly quicker, so you can look to maximize your risk reward a little bit better. Whereas a 4H engulfing, might get you entry up here. So the risk reward is not looking as attractive, but maybe an hourly bullish engulfing gets you around here, which is a slightly better risk reward. So the reason I use the hourly time frame is purely for risk rewards. If you want to increase your win rate, it's probably best to use the 4H. The higher the time frame, normally the more successful the candles are. But yeah, it's kind of that balance between you want to win the trade, but also want to have decent risk reward. And sometimes using the 4H, especially when you're analyzing the 4H and trade the 4H, the risk reward is not always is going to be amazing, especially for a situation like this. If you get a bullish engulfing, up around there on the 4H, stop loss underneath the lows, you're looking at around a 1 to 7.5, which is not that attractive. Hourly, you might get 2.5 or maybe a 3. So yeah, hourly time frame is where I wait for, but there's nothing wrong with the 4H as well. No problem, happy to help. NZD will take a look as well. Thank you, Miko. See you on your channel. Hey, nice. Much appreciated, Robert. What's up, Omar? Hope you're doing good. We'll take a look at NZD. If you want to be a good trader, learn market structure, price action, and money management, you will not need to do. You will not do well relying on tools, indicators, or telling, or trying to emulate someone else's strategy. True. I mean, tools and indicators. I mean, I use Fibonacci. I use moving averages. So indicators, tools, they do definitely have their place in trading. But I do agree that market structure, price action, predominantly, well, price action is a big umbrella term, but in terms of market structure, that's kind of like the fundamental part of my trading, because it tells me the direction I'll be trading in, where I expect the market to go, whether it's time to look for sells or it's time to look for buys. So market structure is the fundamental thing I'm looking at in my trading. Everything else is a complement of that. I'll probably include support and resistance as a fundamental um, thing I look at as well. But everything else is a confluence to back up what I'm looking at and give me extra confidence to take my trades. But yeah, I do agree, truth to be told. But let me go through USD before I forget. Okay, so USD pushing to the upside. I was looking to short this one coming into the week, but the market kind of broke out of the area I was looking to short from. We had these lovely lower highs here, and the market was coming to the resistance here. So I was looking to short coming to this area, but we actually broke through the trend line and broke through that area there as well, the resistance and support, and used it as support yesterday. So from that, I'm not really looking to short USD anymore, even though we do have some slight bearish structure here. If I highlight the major highs, we've got 1, 2, and then potentially 3. You could still potentially roll over and see a down move like we have seen here, but I'm not the biggest fan of this market structure because it's breaking through some technical aspects that I didn't want it to break and actually wanted to sell from. So at this moment in time, I'm just pausing on USD and having a clear out and out bias for it, or looking to trade. I'm just waiting for some more development. Basically, the lower highs are there. Potentially might see some downside, but I don't have enough confidence to short it myself based on the way I trade. Maybe you guys look at something different, but USD, I would have to say bearish because of the structure, but it's not the most convincing market structure in the world. We failed to take out these lows here. Very, very kind of corrective price action here. Getting some more corrective price action on the way up as well. So I'm not really liking how things are forming here with USD. Might see a rollover here, maybe come into some resistance here on the left, but I just don't have that much confidence here with USD, so I'm backing away from the setup at the moment until I get some clearer structure. But if I had to pick a direction, it probably would be downside. Gold bias, gold's very, very bullish. We'll take a look at gold in a bit more detail, but gold definitely very, very bullish. Looking for a lot more upside with that one. Pound USD, we'll take a look. Yes, I do have a channel. I'm pretty sure Trade Nico and Trading and left some links in the chat there, so feel free to go over and check it out if you want to. Okay, so we'll go take a look at gold and pound USD. USD, we'll take a look. Bello, no problem. Miko, did you get into FX with an economic degree or finance background, or self-taught with unrelated course study? Yeah, it's definitely self-taught with unrelated course study. I did not take a degree in anything to do with finance or economics. I mean, I did actually want to pivot and get a degree in that, but I didn't end up doing it. But mainly self-taught, to be fair. My dad introduced me to trading. But since then, there's been a lot of self-learning and a lot of self-study as well. But no, I did not get a degree in anything economics or finance based. There was gold. I'll do pound USD after. So gold is creating some new highs, almost creating the new all-time high. Some markets that have actually printed some new all-time highs, depending on the broker you're using. FXCM, we haven't had a new all-time here. I mean, Oanda, sorry, haven't had a new all-time high, but some brokers are showing some new all-time highs. I'm still pretty bullish on gold. So more downside, and then I'm looking to buy this nice brief consolidation area here at 2019, 2020 is looking pretty good for some long ideas. I'm looking for a bounce into this area and then some continuation higher up. So keep a lookout on this area. Gold looks like it's forming some support slightly higher up. I'm not necessarily interested in buying here for gold. It might potentially move up. It might potentially not. All I can look at is areas that interest me based on my confidence, based on my plan. And 2019, 2020 looks pretty good down here. If you can get a stab into that area, we'll be looking for some opportunities to take part in some more upside for gold. Because the way I see it is that this market structure is just very, very bullish. Market's still printing higher highs and higher lows. This consolidation just turned out to be a really big higher low formation. The market exploded to the upside, so just naturally looking for correction and continuation from the market to go higher and go and pinch those all-time highs around 2076, 2077. So yeah, gold bullish bias, looking for a bit more downside. Not really interested in the price action here. There's no kind of clear-cut level for me, apart from this consolidation, just slightly underneath it. So we'll keep an eye on 2019 for some buys. But yeah, definitely bullish on gold. Pound USD for this one, still pretty bullish as well. It's a little bit corrective, as you can see the way it's moving, but still confidently bullish. And what I mean by that is that the market's still printing successive high lows here. As you can see, each low the market has created is always higher than the last. We haven't broken through one of the previous lows, so it tells us the buyers are still holding firm, and we still do have a comfortable uptrend in our hands. It might be showing some signs of exhaustion, but yeah, if we do get another pullback to the downside, I'll be expecting some more upside there for pound USD. So this is the area I was talking about earlier today, 1.25. If you can come back, retest that area, I do think there can be a big a possible big continuation, because we have broken through the highs here on the daily chart. So rightly so, we could actually see a lot more upside for pound USD now that we've cleared that 1.245 area. Completely. It might be time to see a little bit more upside there for pound. Unless we come back down and break through some structure, then that's a whole different situation altogether. But looks like we are breaking through some highs now. So yeah, simply looking for some corrections and continuations. As long as you don't break through 1.245. If we break through this, then I'll probably change my bias and actually look for a big sell. But only when that happens will I change my bias. So yeah, at the moment, pound USD expecting more upside. There's no kind of real clear-cut level that I'm looking at. As you can see, we're middle of nowhere right now. But if you go to the daily time frame, there is a level here on the left, which I'm looking at around 1.26500. So that's kind of the only point of reference you got up around these parts for pound, if the bullish momentum is to continue. So, whether you're buying it simply back to highs or you're looking for a little bit more of extended target, these are the two areas you'll probably want to consider for some buy trades. Back to prior highs, 1.25800, or you got some daily highs from last year sometime around 1.265. But yeah, definitely still bullish with pound USD. The pound AUD will take a look. Tony Gold, what is up? Welcome to the stream. Thank you, Robert. Much appreciated. But yeah, pound AUD will get to Fenique. I hope I'm saying it correctly. We'll check out S&P, no problemo. Your JPY update. Yeah, I'm still looking at longs. I'll have to wait till the candle closure, so 30 minutes time before I think about doing anything. Wow, Euro Yen is pushing down. So yeah, there is no trade entry there unless the market pulls back up. Again, a lot can happen in the FX world in 12 minutes on a candle closure. But yeah, most likely will not be looking to go long here for Euro Yen. Looks like the market is breaking through that area of confluence. So unless we have some type of mad recovery and push back above that area and get a bullish engulfing, that would interest me for a really nice buy setup, because this could just be shaking some people out who got into the trade a little bit early. This could be taking out some traders, liquidity underneath that area. Then we could pull back. I did take a trade similar to the situation with USD JPY last week. So yeah, I was in some buys down here. As you can see, we had this big bearish move to the downside, and we had a big recovery, giving us this bullish engulf variation pattern. I got into the trade there, and then had a really nice explosion to the upside. But this big kind of bear move here with that bearish candle was kind of like faking out the lows to actually fund that move to the upside. So Euro Yen could be doing that. It could be doing that, breaking through. But again, I only work on candle closures. So open candles are a myth to me. Price could move up. It might continue moving down. It might close the doji. We don't know until the candles close. So when I am looking at the market at my own time, I'm just waiting for the candle closures, or at least a couple of minutes before, to give me some buffer time. And then I'll make my decisions on the closed candles. So yeah, particularly looking very, very bearish. If you close like this, then when you see a big recovery, if the market just continues down or retests that level, then yeah, we probably can expect more downside for Euro Yen, and there will not be a buy setup for me there. And maybe pound yen could start coming closer into this area here, 168. So we'll probably switch my focus more to pound yen into this 168 area, because there could be some nice buys there. Still decent area of confluence. So I'm still liking the setup here for pound yen, but euro yen may not be playing out. We may not have that entry signal right there. So we'll keep a lookout, but nothing really there. Anyway, I'm going to take a look at pound AUD, then we'll take a look at S&P as well. Please, what advice can you give me in looking to be taking my entry on the hour to increase my risk reward? Because the 4H always gives me very small risk reward. Well, again, it depends. It depends how you develop your targets, because the 4H doesn't necessarily give you small risk reward. It's based on the targets you give yourself. Because if you have a TP set an area, there's no obligation to have that TP there. It could be 10 times higher if you wanted to. So my biggest advice to you is, what risk reward are you after? And once you understood that risk reward, understand what time frame will give you that. So if you're having small risk reward in the 4H, understand that maybe you have to look at the daily and the weekly to get your targets, because the 4H can still give you very, very generous risk rewards, same as every time frame, pretty much in retrospect. But if I enter the trade here on the 4H time frame, still getting a comfortably 1 to 2, 1 to 3 here, coming to those highs. 1 to 3 up there. So you just have to have the correct risk reward with the correct targets. So if your risk reward's a bit tight, use daily targets or use weekly targets. But yeah, if you want to use the hourly time frame, you're fine doing that as well. But for me, when I trade in the hourly time frame, my 4H levels are my target. So I don't use hourly targets for the hourly entry. I use 4H targets, and that will help with my risk reward. But it's the same way that you would enter the 4H. Look for candlestick patterns at your areas of confluence, and wait for good signs of rejection to enter the trade. It's the same as the 4H. But yeah, pound AUD, we'll take a look. Okay, so pound AUD, pound AUD is not really at any area of confluence for me. It's kind of in the middle of nowhere. I'm not really interested in the price action for pound AUD right now. We had some really nice higher lows. As you can see, 1, 2, 3. I was looking for the retest of the consolidation slightly underneath it, coming into this area. We missed it by a few pips, as you can see. So maybe if price can dump one more time and possibly give us a bit of a bull flag with this humongous impulse here, we might get correction 1, correction 2, and then get the continuation. That would interest me there for pound AUD. But I'm not too sure if we'll get it. We might just see price continue to rally to the upside back to highs. Personally, I'm not really interested in pound AUD, to be honest. It's not really that area of confluence for me. I'm still pretty bullish on the pair. So if I'm looking to buy, I need price to come a lot further down. I'm not looking to sell the pair whatsoever. Market structure is still very, very bullish. I need price to start breaking some significant lows before I start considering looking to short the pair. Even if it comes to that resistance, I'm not interested. I want to go with the momentum, which is still comfortably to the upside here. So if pound AUD can come back down to 1.86, 1.85, these will be looking at some good areas to see a pop to the upside. At current price action, I'm not interested whatsoever. I'm not really seeing much value in the current price action for pound Aussie. We'll take a look at S&P next. Euro, yen pairs all tanking. The yen pairs all going down. CAD yen, not too much there. CHF JPY still seeing some downside. Take a look at the hourly chart. US JPY seeing a little bit downside there too. Pound yen, yeah, seeing some downside. So yeah, the yen pairs are seeing some downside. Yen seems to find some strength from somewhere. Again, it doesn't really change my bias at all for the yen pairs. I'm still I'm still very bullish across most of them. Euro yen and pound yen are the most attracted to trade. So those are the yen pairs I'm most focusing on. And if USD can get above that resistance, I'll start looking at USD a lot more. At the moment, Euro yen and pound yen are my main focus. So again, Euro yen still got 5 minutes left before this candle closes. It looks like we probably will be closing below the level. But again, things change. This could end up being a big wick on the 4H time frame. As you can see, this 4H candle closes in the next 3 hours and 5 minutes. 3 hours and 5 minutes. So this big push to the downside might look very, very bearish on the low time frames, but by that 4H candle closure, so in the next 3 hours, this could actually turn into a bullish hammer candle and close above there. So that's why it's important to understand, okay, if you're using the 4H time frame to draw your levels, that means you have to use 4H candles to signify breaks, because if I draw a daily level, for example, and I drop to the 30-minute to look for a breakout, the 30-minute will be breaking above, breaking back below, breaking back above many, many times before the daily candle closes. So you're going to be very, very prone to fake out. So with the 4H time frame, I've got to wait for the 4H candle to close to signify the break. So right now, if Audi was to recover and give me a big bullish candle, I'll still look to enter the trade. I'll just treat this as a big fake out, taking some stop losses of people who got to the trade too early. I'll get into the trade. Stop loss will be below the wick. And again, same target into the highs. But yeah, still waiting for the actual bullish engulfing first, though. So we've got a lot of waiting to do. Anyway, we'll take a look at the S&P. Do you have a bias for the S&P, or just asking for my opinion? So yeah, S&P 500 at some critical resistance, failing to break through. Had a few attempts now, 1, 2, 3, coming back into that high. Seeing some strong rejection there, and starting to see a bit of a bearish trend here on the lower time frame. So I did say earlier today there could be some nice sales on S&P coming back into this area here, because you are seeing a bit of a bearish structure now. 1, 2, 3, getting these lower highs. Obviously, as you can see, getting these lower lows, and just printed a new one there. Was looking for a bit of a pop to the upside, retest that structure, then see the next leg to the downside. So fortunately, didn't really get the retest there. We're back at some support. Might see a pop to the upside for S&P. Nothing that really convinces me. There's not a lot of confluence here. I'd rather look for those lower time frame sells and try and take a buy here. A buy down here doesn't look too bad, actually, because then we're taking out some weaker lows, coming to a very important structure that hasn't been retested yet. Might see a good bounce at 4K. So keep an eye out for that for some buys. This support doesn't really do it for me. Not a lot of confidence there. Just an area of support, really. That's the way I see it. But yeah, 120 was a decent level to short from. If you do get back up there, maybe tomorrow, that could be a nice sell tomorrow, London or New York, depending when we get there. Actually, be careful, because we do have actually NFP tomorrow, so it might not be the best time to actually take some trades. But anyway, from a technical aspect, sales look pretty good there. Okay, so I'll go through a couple more pairs and then we'll wrap things up. Euro USD, I'll take a look at, and I'll go for Euro USD, and we'll go through AUD as well. For Nikkei, I'm shorting it, but yeah, looking forward to hear your opinion on it. Okay, for S&P, yeah, so yeah, shorts look good up there, but current price action at support, yeah, it doesn't make too much sense to sell it right now. I'm also looking at Euro Yen for longs, but I really looking for a little bit more down move, just for the better RR. Fair enough. Risk reward is important as well, but yeah, I'm just looking for a good entry signal on that area. And I'll see what I can work with. But yeah, as things stand, it looks like the market's clearing that support. Anyway, let me take a look at Euro USD and JPY. So Euro USD at the highs, still kind of flirting with the highs here. Again, Euro USD still a comfortable uptrend, but it's showing signs of exhaustion. You can see the market still printing these high lows, and it's failing at really trying to create the high highs as well. So I'm not really looking at doing anything with Euro USD until we've had one or two things, which is a comfortable break of structure to the downside, and then I'll look at my shorts, or a comfortable break to the upside above 1.106, which is this resistance there, and then I'll look for the continuation, because right now we're not really seeing much signs that the market's successful in continuing being bullish. So I want to see that success come through. I want to see the market start breaking through, really critical resistance like this. That tells me, okay, the buyers are really back in town. I'm probably going to see some more upside. So retests look good, pullbacks look good after that. And the same thing with the break of structure. The market's building up. It's coming at such major highs in the left. It's kind of, breaking above, breaking back below. So it's kind of confused what it wants to do. But if it can break through some structure, that'll tell me, okay, essentially we just had a rejection of this major high. We've broken structure. We're probably going to form a lower high and start rolling over to the downside. So these are two situations I'm waiting for Euro. Anything in this area here is kind of no man's land. Not necessarily no man's land. It's just very speculative for me. I don't have a clear-cut buy. So I'm not looking to trade it. Maybe you guys have got something there in the lower time frames. There's still a bit of an uptrend there, so it could get you could still get some decent buys in the lower time frames. But yeah, I'm not a big fan of what I'm seeing here for Euro USD. So waiting for a bit more development, and then I'll commit to some sales or buys, just depending where we go. And ADJPY, this one as well, a little bit interesting. We've left behind a really aggressive wick on the daily time frame. Oh, did not mean to do that. A really aggressive wick on the daily time frame. As you can see here, we've got these major highs, 1, 2, 3, 4. Possibly could be printing another one for another dive to the downside. So I'm actually looking at some shorts for ADJPY. I think this is the only JPY pair which I actually have a bearish bias for. And again, rightly so, the structure is bearish. I trade based on structure. All the other yen pairs are giving me bullish structure. This is the only yen pair that is looking bearish. So if you can get rejection back into this area, I do think that's a decent place to short from, back into around 90.687. If you whip out the fib, probably comes into the 50% of that impulse, or close enough into the 50%, we might wick into it. So yeah, AJPY for me is actually the only yen pair that looks decent for some shorts, and actually a pretty good opportunity if you can hold this area with not bad risk reward if you do go back and attack the lows. So yeah, keep an eye out for ADJPY. Shorts look pretty good, around 90.6, but yeah, still need to pull back first. But yeah, guys, thank you so much for having me on the stream. Really do appreciate it. I'm pretty sure A1 Trading, Trade Nick, I've left a link to my channel, so feel free to pop over if you want to see a bit more of my content. Thank you so much for coming out. Much appreciated for coming out to the stream. Thank you so much for A1 Trading and Trade Nick for having me on the stream as well. But yeah, guys, take care, and I'll catch you all in the next stream.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you're looking to get funded, check out Superfunded's examination today and get 10% off when you use the code A1 Trading. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.